Hello, ladies and gentlemen. In this Kickstart video, I'm going to take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar, to kickstart your trading day. From a technical perspective, today's date, January 16, 2024, retail sales came in better than expected, especially the control group, 0.7%. I think the headline number is a little bit weaker, but the control group, which feeds into GDP, was stronger, which is good news for growth. We also saw the Philadelphia Manufacturing Index for January show a sharp rebound. That may be influenced by the election, also by potential tariffs going forward, but big gains in the fusion index for the Philadelphia Fed Manufacturing Index. So let's take a look at the technicals that are driving the markets. We'll start with the euro versus US dollar. Let's look at the hourly chart, and we saw in trading yesterday a big sharp move to the upside that took the price above the 38.2% retracement of this move to the downside. The 38.2 came in at 1.03449, and the high price, I think, went up to about 53 before the market quickly moved back to the downside and erased all the gains and traded down to and through the 100-hour moving down here, which was quite a shock before rebounding into the close. Now, the battle was on between the 200-hour moving average and the 100-hour moving average on the downside after the failure above the 200-hour moving average at above 38.2. So that continued in the Asian session and into the European session. Then we saw some late selling into the early U.S. session, and then with the U.S. data coming out, probably better than expected. The dollar moved higher, the euro moved lower, and we dipped briefly below the 100-hour moving average, but you can see we're back above that level at 102.78. The 100-hour moving average comes in at 102.65. We're going to need to get and stay below that 100-hour moving average to have the sellers take more control and have traders looking toward these levels on the downside, which includes the low price that we saw earlier this week at 1.0176. Where did that take us? If you take a look at the daily chart in the euro versus US dollar, that took us to the lowest level going back to this day right here, which is November 15th, mid-November 2022. It also took us below the 102 level and the 61.8% retrace, which happened to come at the same level right here at 102.00. So that is on the downside here. If we're able to get below the 100-hour moving average. Now, conversely, if the price moves back above the 200-hour moving average, the buyers would assume more control, at least in the short term, and then we'd look toward this swing area up through here, which comes in between 1.0332 and 1.0343, and back at the 38.2% retracement as well. That's always a key level for me after a trend move. When you have a trend move, you want to see the price get above the 38.2% retracement to show that the buyers mean business. They tried to do it yesterday, but pretty much failed. So getting above that level is imperative if the buyers are taking control. Absent that, and the sellers are in firm control in the euro versus US dollar from a medium-term perspective. Let's take a look at the dollar versus yen, and we have seen a rotation to the downside here. The pair I've been looking at in this trading range right through here. And the price fell below this red box right here and trading here today, extending down toward the 38.2% retracement. So that was a positive for the sellers. But what we've seen is a rotation to the upside, and the data today has pushed the price back into that red box, and that gives the buyers a little bit more control if they can stay above the 1.5594 level. Certainly the sellers would be disappointed, and we'd probably see more upside momentum in the dollar versus yen. Other levels on the top side would be our swing levels, including here, of course, here. All these levels would need to be broken to have traders looking toward the cluster moving average, including the 100-hour moving average on the top side. If we do move it back outside the red box for the third time today, then the bias does shift to the downside, and we have traders looking again back down toward the 38.2% retracement. Let's take a look at the sterling versus US dollar. And on the hourly chart, yesterday's trade, we tried to extend to the upside like we did in the euro versus US dollar, but failed and rotated back to the downside. Admittedly, this is kind of a sloppy looking chart. The break higher did get above 38.2% retracement of the January trading range, but we fell short of things like the 100-hour moving average, 50% retracement, and even the 38.2% retracement of this longer-term move to the downside. It's not even close to being broken at 1.23689. In trading here today, we've seen a rotation to the downside, taking the price back below the 100-hour moving average. In the process, the first time it fell below that level, it failed. The second time is right now, and we're trying to stay below that level, 1.2201. We can stay below that level, it'll keep the sellers more in control for the sterling versus US dollar. If we move back above it, or we waffle above and below it like we have over the last 24 hours of trading, then the market is still trying to find itself, trying to find which way the next shove will take this currency pair. Time will tell, but not really in love with the price action we're seeing in the sterling versus US dollar. So that's my technical look to kickstart your trading day in those three major currency pairs. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.